The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 3rd, wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should be pioneers of our future versus prisoners of our past. So as we begin our day, let's always remember that life happens for us, not to us, and we can make that little shift, just that little shift in that words. That means that we can find the gift in every set of circumstances. And that, folks, is the way to live. Hope everyone out there had a terrific Tuesday. It's always great to be back with you here. And I am most certainly grateful for your presence. Of course, I'd love to hear from you. That means just pick up that phone, dial on it at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is TFNN. I'm Steve Rhodes, and welcome to the show right now. Dow futures, they are flat, off 1 point, trading out at 17,860. ES Mini up a half a point. It's flat. It's flat across the board out here. ES Mini traded 2,066.50. King Dollar is anything but flat out here, up about 200 ticks, trading out at 88.90. We've got some movement in the euro. It's made a 1, I think it's a 1 to 1.618. A to B equals CD to the downside. We'll take a look at that out there. Goldilocks up about $5 right now. She's trading at 12.04. Silver up 2 pennies, trading at 16.48. Light sweet crude up 71 cents, trading out at 67.58. A quick peek across the globe out here. What we're going to find is over in Europe right now, basically, you got the DAX up 27, the FTSE off 18 points right now. So, one's up 0.25%, one is down 0.25%. In Asia last night, a little bit of mixed bag. The Hang Seng off 225 points, 1 full percentage point. The Shanghai, on the other hand, up about 0.6%. That means 17 points. And the Nikkei up 57 points, about 0.3%. Okay, now, where do we go from here? We've got to take a look at yesterday, right? Take a look at that price action in yesterday. What did that mean? Well, let's take a look at a couple of different things out here. First, let's go take a look at the VIX index. What do we know about the VIX index? We know that 50-day exponential moving average right now, today, that's priced out at 1450. The VIX closed at 1285. I would say, quick math in my mind, if we closed above 1450 today, it'd have another one-day rate of change in excess of 10%. That is what, here's the thing, on Friday's session right here, if you watch this on TigerTV, I hope that you are, Friday's session in the VIX, it seemed kind of innocuous with regard to any kind of price damage that was done inside the markets. But the VIX index actually was up by 10.44%. Now, what's so interesting about the VIX, when you have a one-day rate of change in excess of 10% or less than 10% out there, I mean, greater than a negative 10% is really the best way to say that. It has meaning with regard to the way that the market behaves within 2 trading sessions. And boy, did that fulfill its objective yesterday. You're never sure how high the bounce is going to be. And at this stage of the game, it's still the bounce. Sellers, believe it or not, still have control of the ball. We'll see how today ends up out here. Today is a critical session. No follow through to the downside yesterday, but the market really did, in essence, what it has done greater than 80% of the time since the 2011 lows that were put in here, and 70% of the time since the VIX was introduced out there. I can't tell you why that behavior is out there. It just seems like maybe it's letting some air out of a tire that's gotten too full, so it just doesn't pop. Something along those lines. But 1450 is going to be the number that we would watch today, and of course we want to watch what that one-day rate of change is as well. I'm not saying that the VIX is going to go up. Just saying it's an area that we have to be paying attention to. If we take a look at the summation index out here, it's kind of interesting here is the Dow made a new high yesterday. But if we take a look at the price oscillator out here, what you'll see is in the bottom portion of my chart, you'll see a descending red line from the high back here on October 31st after that big push forward, that big move, that move by the Bank of Japan where the markets really moved quite a bit higher. I think a couple hundred points inside the Dow futures out here. And if we take a look at that descent, so even with yesterday's move higher, this is not the typical behavior of a bullish market. Now, the price oscillator, still above zero. What does that mean? It means a summation index. This is a little green line here in my chart. Still, the trend is still to the upside inside of the Dow. It's a little bit different inside the NASDAQ Composite and inside the New York Stock Exchange. So we got 30 stocks, and not even all 30 of them that are really doing the entire work of a majority of the market out here. If we go take a look at the NASDAQ Composite as an example out here, NASDAQ Composite, if we take a look at yesterday's trading session, this is what I find most interesting here. The NASDAQ had an inside day. What's an inside day? If you take a look at the prior day's session, if we look at the low, 47.24, the high, 47.82, we can see that yesterday traveled with inside that candle. An inside day basically means, I wish I had a percentage study on this. I don't have a way of, I suppose there's a way to do it. I just don't have the resources to program it to do it. But what I do know in studying inside days is typically what happens is the trend that it just came from is going to resume. Here's an inside day, just as an example out here. Here's an inside day. If we take a look at this trading session from September 25th, that very next trading session right here looks really kind of similar to what we just took a look at here. And if we take a look at this trading session from September 26th, what ended up happening? Price continued moving down. Now, at the same time during that trading session, it's nowhere near the same as what we're looking at today. We already had kind of a bearish cross, what I consider to be a bearish cross, when the 8-day exponential moving average crosses below the 13-day. We don't have that here as we speak right now. But nonetheless, what we do have is a similar pattern. And what we also have at this stage is, even with yesterday's rally, the price oscillator still remains below zero. It won't take much, a couple hundred net advancing issues, so it won't take much. So if Monday's low was the next low in the Santa Claus rally, and it's possible that it is, then we will see this price oscillator move above zero and probably do it in a big way as we speak, as we take a look at today's market. We won't know really till the close out there. New York Stock Exchange, really the same scenario out here. Now, it didn't have an inside day, but its price oscillator still below that zero line. Off the top of my head, I don't remember how many net advancing issues it needs, but maybe it's around 500 or something along those lines out here, but still wasn't able to turn it positive. So there are caution signs out here, both bullish and bearish caution signs out here, and these are the ones that we want to be paying attention to for the trading session. If we take a look at where things are at, if we go take a look at the futures markets, look at the daily out here, the daily contracts, if we take a look at the Dow specifically, go back to the Dow futures, and we take a look at from the trading high of September 19th down to the low on October the 15th, but we can see a couple of things. Number one, there's a new market profile that's been around for a couple of days. That price point to the top is 17,845. You're trading at 17,858. Really narrow narrow box. Thank you. I knew I could get that out. So a very narrow box out here that says that this should have support down at 17,717 inside the Dow future. So you want to be watching that as a signal, 17,717. If we see that, price oscillator inside the Dow will go ahead and turn negative today, almost guaranteed. And I would imagine we'll have follow through the downside inside the composite and the New York Stock Exchange. If that doesn't happen, what we likely see is the Dow move up to the 18,212 level. 18,212 is the next floor. You see, if we take a look at expansions of swing points, what we've got is price trading between the 1.272 and the 1.618. It's in between that floor out there. And that says, hey, gravity might want to go ahead and just lift it all the way to the 18,212 level. So it is going to be the Dow that we want to be focused on and paying attention to. That doesn't mean that we're going to ignore the NASDAQ out here. If we take a look at the NQ futures, see what they are doing out here. The NQ still has a 1-to-1 A to B equals CD. that comes off of the lows back here, little hammer candle back in April 15th to be specific. That would be your A point. Your B point out here was on September 19th. Your C point, this little retracement, 0.618 retracement down into October 16th low. Your 1 to 1 A to B equals CD on this takes you up to 43.93. That says you've got to take out the bearish reversal signal that we got inside the NQ. That says resistance will be the high from November 28th, 43.1250. A close above that, that sets up a move to 43.93. But if the Dow is going to lift the boat higher, if the summation index for the NASDAQ is going to go ahead and turn north out here, it's probably not 43.93 where the sights will be set on price. It's more likely 45.85 out there, but 43.93 would be its next stop. If we take a look at expansions as well, that B to C swing point expansion and see where we're at, you can also see that at the 1.618 expansion takes us to 43.87. So we're very close. You got two real synergistic, if that is a word out there, two synergistic levels right around this 43.93 area inside of the NQ. It's got to get above the high from Friday out there, and that was it Friday? Let's see, Wednesday? Yeah, Friday. That was at price point of 43.48. Maybe I will tell you, the date was November 28th. That's the date. Now, that's inside the NQ. If we take a look at the S&P futures out here, the S&P futures, their price oscillator was also turned down as well. I don't have the that requires a spreadsheet to do it. I don't have a way to really import that into e-signal out here. If we take a look at, now, no inside day yesterday for the S&P. In fact, if anything, the S&P, the actual swing point, we saw a higher high inside the futures. Let's see, November 26th. That high was 2,075 and a quarter. That's the high that we're dealing with. And the low there was 2,065 and a quarter. You're trading at 2,065.50. So it's trading inside there. It's trying to get inside there. It's still in between its market profile out here. If it, it looks to me like what the ESPN actually wants to do here is go test that high, which would be, and maybe it wants to break out above that high. The high, by the way, is 2,000. Again, that number is 2,075 and a quarter out here. So the way that the market opens and trades during the first hour probably provides us with a ton of information out there, and I'll be with you at least for the first hour and a half that the market is open. Now let's go take a look at the currencies out here and see what we have going on out here. Let's go take a look at the euro. Let's look at the futures contract. That way we don't have to worry about any delayed data out here. And as we take a look at this, let's go look at the A to B equals CD down pattern inside of this. Our A point out here, and we're taking a look at the smaller one. Our A point's going to be, looks like this trading session. I don't have my cursor. I'll go get my cursor live, and I'll give you what those dates are. So your A point, give me a moment here to get that active. Sorry about that. Excuse me for a moment. Cursor, turn the afterburner jets on. There we go. Okay, so as we take a look at it, your A point out here is June 1st high. I'm sorry, May 1st high out here. That's your A point. Your B point is down on July the 1st, and your C point out here, the A to B equals CD to the downside. What was I talking about? No, that's not what I was looking at. If we see a close, okay, so here's the deal on this A to B equals CD. If you see a close, if the July 1st lows get taken out inside, I'm looking at the monthly chart. No wonder. Okay, that's a monthly chart. Let's go back to the daily chart. No wonder things weren't lining up. My apology, folks. When we get back, I'll have it all straightened out. We'll look at the daily chart for the euro, but I think we'll want to come back and see what the monthly chart means as well. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see a host's charts and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Okay, we got our Euro chart back up on our screen. So we're taking a look at the A to B equals CD down. Now, this is a daily chart that we're taking a look at, so it's going to look a lot different than the monthly chart. But nonetheless, we'll go back and take a look at a monthly chart. But our A point down here is going to be the October 15th high. That's your A point, your B point, this little doji back on October 23rd. Makes about a 60% retracement into October 29th. But we can see here this morning, the 1 to 1.618 A to B equals CD to the downside. Price is trading just slightly below 1.2329 is the number. We're trading really right, pretty much right at that level. Now, if this area fails, and by failure, it means that there's no bullish candle that shows up today. It means it totally has to reverse its course of action. Maybe it's not till tomorrow. But if this level fails, then it says price goes down to the next level. The next level would be the 2.0, the 1 to 2.0 A to B equals C. That takes you to the 1.222 level, and that's what our expectation would be. Of course, that's going to go ahead and fuel the U.S. dollar index. So the U.S. dollar index is not going to back off until we see the euro start to turn around. At this stage here, we do not see that. That is not in the cards as we're speaking right now. Now, the thing here is that we don't really have any kind of bullish formation at the current lows out here. And that means the lows of the trading session of November 7th or the lows of the trading session of November 24th. So there's really no natural area of support on the daily chart. Now, let me come over and take a look at, I've got the actual currency cross pair up here, so we'll just say the heck with the futures contract out there for the euro. If we take a look at the A to B equals CD to the downside, that says that price could actually get down to $1.14, 1.143 out here. Now, in this case, there is some support from a monthly standpoint. So again, it's a monthly chart that we're looking at. You've got this nice reversal pattern here. This is called a three-river morning star. That says that there should be some support down at the low from the month of June. That price point is 118, 1.1877 to be exact. So whether it's 118.77 or it's the 114 level, until we see some kind of bullish reversal signal, even on a monthly basis, back here, meaning back here by July of 2012. In August of 2012, you had a nice little piercing candle, and then you had some follow-through on that very next session. So there is some pretty decent support down here. Likewise, if we go over and we take a look at the opposite side of this trade, which would be the U.S. dollar index, if we go take a look at it, let's look at the continuous contract here, so that we can put this on a monthly chart. Where do I? Here we go. Here's the U.S. dollar index. So let's keep this on a monthly chart out here. It will see basically the same kind of resistance levels. What I mean by that is if you come back to November of 2008, that high inside the U.S. dollar index is 89.25. That level was hit and rejected back in March of 2009. It basically was hit and rejected in June of 2010. So far, the intra-month high that we've seen here is 88.99. What was it? 88? No, it can't be. Yeah, 88.99 and 89.25 is the nut. So it looks to me like that's the level that that's going to be hit. Now, if you close above 89.25, again, it's a monthly chart we're looking at. So really, the daily you would see it. If you close above it, you come back and test it and reject it. That says that the U.S. and then move higher. That would say that the U.S. dollar index would also want to. It would be rejecting a natural area of resistance, and then would go up to the next level. You might say, "Hey, what is that next level out here?" So we got to look at both sides of the trade. Always look at both sides of the trade. You'd have to say it's a swing point back here from November of 2005 inside the U.S. dollar index. That's up at the 92.53 level. So that's what's going on inside the currencies. If we take a look at the Great British Pound, she's trying to hammer out a bottom. Now, this hammer here, let me switch over. Let me get out of the monthly chart. Let's go take a look at the daily charts. There is a hammer low that's important. Again, this is a futures contract now that I'm taking a look at. The currency pair, same thing, same hammer candle, which is from November 14th. And that low out there, 1.5589, that was tested a few days ago. It continues now for a hammer candle. Where the hammer candle, the meaning behind it, it's very bullish. They're difficult one-day reversal candles to form. It's why we pay attention to them. But we've been trading with inside this and trying. Now, it hasn't been able to bust out those lows out there. It has tested it, but it also hasn't really been able to get any traction to move higher. So much really like the way gold is traded, with the exception of 2 days out here. Gold has really not had much in the way of traction. Of course, we know that when we took a look at gold yesterday, let's go take a look at Goldilocks. There's a trend line that we want to pay attention to. Is it on this chart? No, it's probably on this page right here. If we take a look at the current contract for gold, it's up $4.80 right now. But what we'll see is what's so interesting is that trend line off of the high from August 14th. Your next touch point out here is going to be October 21st. It's the yellow line out there. Gold needs to get above that to then say, hey, that nice, that wide price spread day that we had a couple of days ago, gold is ready to break out. But otherwise, this thing has just been closing right around this 1198 here for quite a number of sessions. This is Steve Rhodes, TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 14 points. Trade out at 17,865. S&P is flat, trading at 2,067. A NASDAQ Composite up 3, trading at 47.58. Russell 2000 off 22 pennies. She's trading at 11.68. Gold's up $4. Silver up 14 pennies. Platinum up 5. Natural gas back 6 cents right now. If we take a look at the natural gas contract out here, looks like this wants to make a run for the most recent low out here, the most recent swing point low. That'll take you back into the October 27th level. level anywhere between $3.80. That's the high, down to about $3.70 out there. So far you've actually hit that. So we'll see if it's going to hit it and reject it out there. If it closes inside $3.80, it ought to go test the bottom out here. This has made more than a 1 to 1.272 A to B equals C to the downside. This needs a bullish reversal signal as well, and that is not in the cards as we speak. Let's take a look at some things that are popping and dropping in the marketplace. Lead the charge the upside. We got GIII out here. GIII Apparel. I'm not really sure if that's the name, but they're out with numbers. Let's go take a look and see how this equity here is trading. It's up 12%, up $10 and change. That looks pretty good out here. Let's pull this back, see what it's trading into. So it's got a swing point out here. It was a little sign of strength as well. It has had a couple of signs of strength recently. One back here that began on June 3rd, 2014. Let me move this up here. It makes it easier for me to read. The volume, that was wide price spread. Accelerated volume, 936,000 shares out there. We saw another nice move off of basically price came back into that, came back to the breakout level. You saw another sign of strength with 1.4 million shares. Now, during that October low, when things just simply were being thrown out, there was an A to B equals CD to the downside. Looks like that had completed out here. And the A point was this high volume untested high out here. Now, that had about 638,000 shares, but for this equity, that happens to be a high volume high. There's your A point, your B point down here on September 24th, and your C point out here on September 26th. Makes a 1 to 1.272 A to B equals CD to the downside. What a great tool that A to B equals CD pattern is. If you'd like to really learn about that, I mean immerse yourself and really learn all the trade secrets of buying and selling the D point. It is not too late to get over to the homepage at TFNN.com. Over on the left-hand side, what we call a little carousel area, you'll see an up and down arrow there. You can sign up for my 7-week trading course. You'll get immediate access to the 3-hour workshop that was done 2 Saturdays ago. You get immediate access to the 2 first special reports. I was only supposed to do 1, but I went ahead and did an update on that on Monday evening as well, just so we could take a look at some of these patterns and how they actually played out. Pretty cool as well. So go on over to the homepage at TFNN.com, sign up for it. You'll get the rest of the session. You'll get the next live session on January the 9th out there, and I will teach you all about this pattern and much, much more out here. Now, let's take a look at what this equity here is doing right now. It's taking out its swing point from September 3rd. Again, 638,000 shares there. You've done 200,000 basically this morning. So this now is setting up another A to B equals CD, this time to the upside out here. I would say that the A point out here, the one that I would visually use, I take this swing right down here from February the 20th as my A. I'll come all the way out here to September 3rd, back down to this low on October 20th. And it says this is headed for the 98.67 to 106.29 area as it takes out its B point with volume as we speak. That is GIII. We've also got IPG Photonics. That's up 5% this morning. Let's go see what that is trading into. They see where they are with numbers. No, I don't see anything with regard to numbers. Now, this is gapping up and taking out a B point of a potential A to B equals C to the upside. Volume on that B point, which is the trading session of November 3rd, was 521,000 shares. You've done 113,000. So this looks like this is going to have volume to today to confirm an A to B equals C to the upside. Now, that's going to give us our A point down there. Our B point's going to be on November 3rd. Our C point on November 19th. The A point, by the way, 67.8 on October 15th. Now, this one here says 1 to 183.98. I'd have to say more likely 87.90 at a minimum when we take a look at IPG Photonics. Now, what could get in the way? Okay, so here's the issue that this has out here. This is a little natural area of resistance. Let's take a look at the volume out here. That's December 24th. How about that? Christmas Eve. So it's got 273,000 shares. So, you know, even if we, how do you really identify what the real volume should be on that day? You can't. If we go back to the prior session, maybe that'll help a bit. 450,000 shares out there. So this day was 273. So okay, we'll double it. We'll say that's probably about right. So you know, and it's got the volume right now today, but it's got to take now. That's $79. So this is going to have a confirmed A to B. It looks like. You know, it depends on whether or not it closes above the B point. Again, let me give that to you out here. So we take a look at it. Our A point down here looks like, there we go, our B point, by the way, which is the November 3rd high. and then the C point down here. Now that high was 75.21. You're at 75.72. So if you close above that, expect this to run into some resistance at $79 and then break through that area and then probably make its way up to about the 83.98 level. And that is on ticker symbol IPGP. Let's take a look and see what's moving to the downside here. Puma Biotech. Wow, this thing is getting trashed this morning. Off $31, down 13%. I don't see what the news is behind it. Maybe have something to do with a drug. But how about this? This thing here is now pulling back into a breakout. It's pretty cool. Now, the actual breakout inside of Puma Biotech actually took place on July 23rd. That's your wide price spread day. That was 8.1 million shares. I mean, when I say wide, I mean wide because the July 22nd high was $60. So you went from 60 all the way up to 212. That's almost like they must have saved something out here, so that is almost like a total change in dynamic inside the company. I don't know what took place out there, but right now, what it is doing, price actually backed off for a couple of days, and it moved down into this candle session from July 25th. Now that candle session, by the way, had 1.4 million shares. Of course, your real benchmark is going to be, it's going to be the low of that candle session, which is 189.30. It's also going to be, from a volume standpoint, it's going to be that candle session from July 23rd, about 8.2 million shares. But if this equity gets inside the gap, and it's a wide gap out there, pretty tough to say where price would actually move to. Now, one way for us to take a look at a price projection on Puma Biotech would be to take a look at the A to B equals CD down pattern here. And that would be by taking a look at the October 15th low, which has 534,000 shares. So you're already taking that out with volume. So the question is this going to get inside the gap? I don't know the answer to that. What we do know is if it does get inside the gap, what we can start taking a look at is a pattern for where price would potentially pull back to. Your 1-to-1 level takes you to 175.89. Your 1 to 1.272, about the 154 area out here. So right now, it should be finding support. We'll see if it does. Well, remind me tomorrow. We'll come back and we'll take a look at Puma Biotech because it has a gap down. And it's gapping down right into the last time where it found some strength, July 25th, 2014. We've also got the Bob Evans Farms. BOBE is the ticker symbol. Bob Evans down 10% this morning, off $5.50. Looks like they were out with numbers, and the profit, Bob Evans Q2 profit was down. Let's go take a look and see where this stock is trading into. Now, Bob Evans Farms, it's volume off of the high, and it was at least a 52-week high, so that's not necessarily a good thing. It made a high yesterday. Daily chart is what we're looking at, 689,000 shares. So far today, it's done 239,000 shares out here. So as how about this? Well, Bob Evans came back. It's kind of interesting because Bob Evans had fallen apart right here. Let me turn off the market profiles. Let's do that. Let's just clean up the chart just a tad out here. Okay, so if we take a look at Bob Evans, this thing had a breakdown session back on December 4, 2013. How about that? Seems like every December, I don't know if it's every December, but 2 Decembers in a row, it has disappointed analysts, disappointed shareholders out here. That trading session, by the way, back in 2013, 1.6 million shares to the downside. Been trading for 13 minutes. It could easily do that here today. Now, this was it's not so much volume off of its all-time highs. That was a 52-week high out there. But that level held as a level of it got above it, so closed that window. So can't really look at that. Now, so where's Bob Evans headed to? That's really the question out here. Let me put this on a weekly chart, see if there's any kind of volume pattern or anything along those lines out here that we can see. You'd have to say that Bob Evans, so on a weekly chart here, the volume is right here on August, the week that began August 25th, 3.9 million shares. You're 1.5 already through today. You'd have to say that's probably where Bob Evans is going to head down to, 49.80, 49.45, maybe down to 42.81 or so. BOBE is the ticker symbol out here. All right, so let's go take a look at the ES Mini. I want to start off and take a look at the 120-minute time frame chart here for the ES Mini. So the key level to be watching, this is horizontal blue line going across my screen. 2070.75 is the number. Let me get my cursor up here. We're not up there yet, we'll see if in fact it is able to take that level out, or if it just test it and it acts as resistance. If we see it close above this level here, then it says that the bulls would be back in control for sure. That's what it would be telling me. That's the message it would be telling me. Let's go check in and see what the New York Stock Exchange is doing right now. Let's go take a look at those summation indexes out here. And I had a question came in from a Denner in a email during the break asking me, hey, where can they access the New York Stock, the summation indices out here? Where can they access it in their eSignal software chart and stockcharts.com? Now, stockcharts.com, I don't know the answer because I haven't used it. I don't know if it's out there. Inside of Ensign Windows, so I say eSignal, inside of Ensign Windows, the way that I used to have to do that is I had to import it each and every day. I had to build my own spreadsheet template, which I still maintain, but there is a tool set that you can subscribe to. Same guys that actually helped me build the horizontal trading ranges, that have built this tool here that identifies the summation index, and this is inside the eSignal. Now there are some other places where you can get it for, I think, where you might be able to see it for free. You might be able to even see it on Tom McClellan's website. I'm not sure out there exactly. I don't recall what it is that he shows on a daily basis, but you can also get it here. You can certainly see it here. Now, if we take a look at the New York Stock Exchange right now, there's enough net advancing issues to push that price oscillator back above the zero line. So you can see I have this thing set here so it's not on close, so I can see what's going on intraday out here. But we want to be paying attention to what's going on inside the NYSE as well as the composite. The composite too, just slightly above. But this is a tool that is used really for the end of the trading session, so it's for the close. So key levels to be watching inside of the New York Stock Exchange. Inside of the S&P is going to be that 2,000. There we go. So looks like we spiked up into it, 2,070.75 so far, and it is a very strong natural area of resistance. That always amazes me is how strong. Likewise, when price gets above it, it is a change in polarity, and that's a change in polarity worth paying attention to. In fact, inside of and this is the 30-minute chart that we're looking at here for the ES Mini, what I would say is that if in fact price is able to take that out, the actual A to B equals CD pattern that I would use out here, I'd use my A point down here about 10 o'clock in the morning on yesterday as my A point. My B point would be out here from about 3 o'clock yesterday afternoon. My C point down here at about 4:30 or so this morning. So if in fact the ES Mini is able to clear this 2070.75 level, you're looking for price moves up into the 2078, maybe 2082 type of range out there. And so that's what you want to pay attention to. So that should help each of you out there, whether you're a bull or a bear. Those are the numbers that you need to be paying attention to, regardless of which side of the trade that you are on. If we take a look at a couple other things out here that are moving to the downside out here, we've got Tesla's off $4. Wynn Resorts, we haven't looked at Wynn Resorts here for a while. Let's go take a look at Wynn, WYNN is the ticker symbol, off $3 here this morning. This is a weekly chart. Let's get this on the daily, see what Wynn Resorts is doing. So gapping down this morning right into its most recent swing point low, which was October the 15th. So Wynn Resorts making it back to October 15th. Kind of cool, actually, to see some of these equities pulling back to the 15th to be able to provide us with some information as to what's going on. Because if it's able to bust it out, that provides us with a set of information about a market retracing. If you've got some markets that are pulling back into October 15th, really didn't respond that much off the October 15th low, Wynn Resorts being one of them. I'm not saying Wynn Resorts is going to be a barometer for the markets, but it does help us understand, how are markets handling that October 15th low. In the case of Wynn, it's 2.3 million shares down there. Been trading for 29 minutes. Is that 19 minutes out there. And this has done 298,000 shares. So volume volume is actually pretty strong today. That says at least Wynn Resorts ought to go test that low 168.80 out there. Looks like there's already an A to B equals CD to the downside that's in play that should take Wynn Resorts down to about the 161-ish level out here. This has multiple A, B equals CD down patterns. That lightning bolt pattern, lightning in a bottle. Right now we got the Dow up 6, S&P up 4, composite up 9. You're right.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Dow's up 13 points, straight out at 17,892. That ES mini, that S&P futures, just peaking over that 2070-75 level. That is sort of the session high, the actual high. Let me see here. What did it get up to? 2,071. Trading right now out at 2,070-75. So a move above that. And we'll use a 30-minute chart out here. That'll be the easiest way so that we can watch what takes place here between 10, what takes place at 10, what takes place is at 10.30 out there. But that's going to be a real key level for us to be paying attention to. If we take a look at gold, you've got gold's up $5 right now. Let's not look at gold so much as let's go look at some of the gold equities out here. Rand Gold, GOLD being the first one that we want to take a look at. And I just was caught Tom with the replay of Tom's show yesterday, and making just an extremely valid point out here that with regard to the gold equities out here, that there are some that behaved really, really well, and some that there just is a question mark as to what's really going on. So there's some divergence, and that divergence was the move lower on Friday with light volume. Of course, there was a shortened trading session out here, but in the case of Rand Gold, November 28th, there was 1 million shares to the downside. The next big upthrust, which was on Monday, on December 1st, 1.1 million shares to the upside out here. You know, Rand Gold is kind of like, why didn't Rand Gold have more juice and more energy in it to the upside? So Rand Gold right now, it's got resistance at the bottom of its gap, which was November 26th. That's out at 69.90 is the number out there. If you take a look at, of course, Gold Corp, this is one that we want to use as a gauge to what might happen with regard to the GDX, to the jump all aboard signal out here. And that means it's got to get above resistance at that open window from $21.42 out here. This thing had moved down with 6.4 million shares on Friday, and it moved up with 12 million shares. So that's a beautiful thing. So that's the kind of price behavior that you want out here. Of course, the reality is that 12 million shares was really going against the downdraft of 21 million shares. So in the case of Gold Corp, it's got a different dynamic. It behaved well between the Friday and Monday session, but it certainly didn't have enough juice, enough volume to be able to get above that open window out there and repair that. Nonetheless, any close above 21.42 would do that, and that would be your message to start taking a look at the doubles, the triples, or just a single out there. But if we let's look at one more gold equity out here. Let's look at Goldfields. Goldfields, one of the stronger looking charts out here. So if we take a look at its retracement on Friday, 4.9 million shares to the downside, and then to the upside on Monday, 6.8 million shares. So that closed the small little window that was out there as well. So Goldfields, absolutely one of the better looking equities from a technical stock charting standpoint out here. And this wants to at least go up and test that September 2nd area, somewhere around 483 to 469. That is on Goldfields, and that's just a couple of the mining equities. Let's go look at... let's take a look at one other thing here that is moving to the upside. And that would be, let's see, percentage-wise, it looks like Pioneer Natural Resources, PXD. Although Pioneer Natural Resources, this thing had gapped down a few days ago, 3.3 million shares. It's been trading right around 3 million shares. Today, 224,000 shares. It's inside this gap, so Pioneer Natural Resources could get up to the 160 level. It's trading out right now at 159.39. So, folks, the numbers we're watching for today, I would say the 2070-75 level. Watch that on the ES Mini. Probably about 3 to 4 points higher inside the actual cash index out. Thanks so much for joining us. If you're off to start your day, have a wonderful Wednesday. I look forward to seeing you tomorrow. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.